Welcome to the Strategic Insight Global Research Update. My name is Daniel Enskat, Head of Global Consulting for SI. I'm here with Hong Kong-based Senior Research Analyst Lise Carpenter. We are sitting in New York, but our analysts travel a lot. What we'll talk about today is not so much a spotlight, but a look at the flows so far this year. So if we look through April, where has the money gone, what are some of the main trends, and we'll discuss that for a couple of minutes. Year-to-date flows, where do we stand, how does it look for the mutual fund industry, Lise?
It's looking good. It's at $270 billion US so far year-to-date. April has been the biggest month since October 2010, with close to $100 billion in flows.
So there's long-term flows. We're approaching 300. In 2009 and 2010, we had record flows of about 1 trillion. So it depends on where the rest of the year, of course, goes with all the uncertainties that you have in Greece, with sovereign debt, in the US with fiscal deficits, in Japan with the earthquake, in the Middle East with political turmoil. But all this notwithstanding, we already have 270 billion in flows. Half of that is equities. So that's very good. When we look at where the money has gone, we have seen the biggest contributor being not so much the local European and local Asian, but the cross-border industry and the US. Do you want to spend a second on that?
Sure. In fact, cross-border funds accounted for 80% of all non-US long-term fund flows. And actually, in looking just at Europe, it's actually closer to 90%.
Which is not new. I mean, this happened in the last couple of years. We wrote recently a piece on the 25th anniversary of UCITS, and we'll talk about that separately, but 90% of the flows going to cross-border UCITS is a trend that we've seen in recent years. So there is, in Europe in general, a move towards a cross-border industry, not so much a local industry, and then the rest is US. Now, when we look at the flows themselves, and the cross-border fund, the global flows, which managers are benefiting year-to-date mostly from new net cash flows?
Both Davids and Goliaths alike.
David and Goliath, let's start with. What are the David and Goliaths?
So when we coin the terms Davids and Goliaths, Goliath would be more larger international fund firms versus Davids, which are more specialist and boutique type firms. And we saw both of those types of managers doing well so far year-to-date. Of course, Franklin Templeton tops off that list.
I wouldn't say of course, but it's the second year in a row that they do. Why? What's the top fund that gets most of the cash flows for Franklin Templeton?
It's still the Global Bond Fund, followed closely by the Total Return Fund.
Okay, so that has been in 2010 and 2011 their highest cash flow fund. But okay, so the top position is Franklin Templeton. Who else is on that top 10 list?
We also see firms similar, such as JP Morgan and BlackRock, but more interestingly, more boutique firms, David, as we mentioned, Investec, M&G, are also making it onto that list.
Now, what's interesting about those is, and we talked about this in our recent books, one, Building Bridges, which looks at distribution dynamics across Asia, but with global implications, and then the 7 Secrets of Distribution. One of the things that distributors are looking for is a flagship theme or investment philosophy. And Investec, of course, as a South African fund manager, has credibility in the global emerging market space because they're coming from South Africa. Now, in the case of M&G, where did most of the money, or what's sort of the reason why they got a lot of flows?
A lot of their flows came from 2 main products, mostly.
One is more their corporate bond fund, so the corporate bond direction. The other one is it's not really a product, but here's where it gets interesting. They have a 100-year history. So on the one hand, you can say we've been doing this for a long time, and on the other hand, you have a specific fund that really works, a couple of funds that really work that now contributed to more distribution. Investec, as we talked in prior videos, in the Latin America space is very successful, has picked up a number of mandates there. So we see these small fund managers gaining, and then large fund managers gaining as well. Now, the flagship funds, whether it's the Global Bond Fund or some global emerging market themes, are very visible. What's happening on the new fund introduction space by region? Is that coherent? Is it very diverse? What has it been so far in 2011?
It's been mostly diverse and very interesting. For example, in Asia, you have the first official SRI fund launched in China. And
Chinese socially responsible investing.
Interesting.
Very. And then?
In Europe, you of course more so have the guaranteed fund story via bank distribution.
And that's more in Spain and Switzerland, Italy, etc. Yeah.
And cross-border, we see a lot of varied themes, ranging from local emerging market currency debt to absolute return themes and renminbi bonds.
Renminbi bonds, and that's on a cross-border basis. That actually links to Switzerland that we talked about recently, and Bank of China launching funds there. The renminbi space is not only interesting in Hong Kong, it's interesting now. HSBC launched that fund, a renminbi bond fund, on a cross-border basis. So to summarize some of these trends that we've seen thus far this year, we have 270 billion in flows. We're on track potentially to go again to 750 to $1 trillion, despite all the turbulences or the uncertainties in the market. We've seen half of that to equity funds, which is a switch from the fixed income flows that we've seen in recent years. Then most of the drivers are US funds and cross-border funds. In the cross-border fund space, we see the David and Goliath story. Actually noteworthy here is that so far this year it's 7 Goliaths and 2 or 3 Davids. We talked about the David and Goliath separately, but a number of large fund firms are really benefiting from flows. Franklin Templeton, Fidelity, others, JP Morgan, BlackRock and the like. And then in terms of new fund introductions, it's a really big open field, from absolute return to local currency debt to protection and to SRI in China. So we see a little bit more there, as well as index funds. Thank you for watching this update, and we'll see you again next month with new fund introductions and top selling funds.